Thank you, sir. You may begin.
Good afternoon, and welcome to the Ethics Fundamentals series. My name is Patrick Shepard. I'm very pleased to join you today and be joined today by Cheryl Kane-Piasecki, who's the other lead instructor here at OGE's Institute for Ethics in Government. And today we're going to be talking about roles for supervisors in the confidential financial disclosure program. As many of you are probably aware, we are rapidly approaching the due date for the annual confidential financial disclosure filings. Rapidly.
Yes, well, and hopefully some of you you've started collecting some forms from your folks already.
So we wanted to take this opportunity and provide a refresher on ways that supervisors can support the confidential financial disclosure program. So we're going to talk today about some resources that you can use. We're going to talk about how we figure out who needs to file these reports. We're going to talk about ways that you can serve as a subject matter expert or intermediate reviewer, and kind of give you some visibility into the program and some common errors that filers make, so that we can really streamline this and make sure that the confidential programs in our agencies are working effectively. Before we get started, I wanted to take just a few minutes to show you where some resources are. Things have moved around a little bit since last year and been updated. So if we could look over at the helpful resources. So here on your screen, you'll see helpful resources for confidential financial disclosure. You'll find these under the financial disclosure section of oge.gov. And the documents provided here can be a great help during the annual filing season. You see there's a how to file an OGE Form 450 tutorial. So that's something that you can give to filers. It's sort of a video instruction about completing the reports. There's a confidential financial disclosure guide, which we just updated.
Yes.
So this is up to date, current, and in alignment with all of OGE's new regulations and new policies. And there's also a form that we're going to take a look at in just a minute here that walks you through the process of identifying a filer and gives you some decision points for making that determination, whether an employee needs to complete a report. We also realize that there are folks who are not supervisors. There are ethics officials who are interested and need to learn about the confidential financial disclosure review process. And we wanted to direct you to some resources for getting folks up to speed on confidential financial disclosure review. If we could take a look at the OGE Institute for Ethics in Government page. So if you're watching online today, on youtube.com/OGE Institute, you can find the financial disclosure playlist. And this contains more than 10, I think, more than a dozen presentations about topics that are useful for financial disclosure reviewers. So if you have new reviewers in your agency and you want to get them up to speed, that's a really good place to start. It's also helpful if you have new public financial disclosure reviewers. All right, well, I think that's enough administrata.
Administrata, exactly.
Yeah. Shall we, let's sort of get into the presentation?
Absolutely.
All right. So today we're going to be focused really on the roles of supervisors. We are planning to do another broadcast for reviewers that'll build on our 450 massive open online course. But today we're going to be focusing briefly on the roles for supervisors in this process.
And I think one of the critical things about today's presentation, whether you're an ethics official or a supervisor, is that what we're going to cover today really kind of gets to the heart and soul of the substantive aspect of, why we do confidential financial disclosure. And a supervisor's role in preventing conflicts of interest is really critical. They are sort of uniquely in a position to provide the ethics office with information that is not only relevant to, but is essential for the ethics office to do a conflict of interest assessment and analysis. And in keeping with that also, I mean, a supervisor's role is to protect the integrity of the programs over which they have cognizance. And so their role in making sure that they're preventing employees from engaging in matters where their participation could in ways jeopardize the legitimacy or the integrity of that matter. I think that's a truly apt role for a supervisor to play.
Absolutely. And I think we can view the confidential financial disclosure program as a risk mitigation strategy.
Absolutely. Absolutely.
When we get to looking at who files these reports, we'll see that that's a risk-based determination. When we talk about the substance of the review, it's a risk-based determination. And the risk that we're trying to mitigate is the risk posed by financial conflicts of interest. These can upend our programs in all sorts of ways. We can find legal challenges if we're in the contracting world. We can have all sorts of things that can go wrong when we have employees in decision-making positions who have conflicts. So that's really what we're trying to do here. Our sole purpose is to prevent conflicts of interest through the 450 program.
And this is juxtaposed with the public financial disclosure program, where part of the raison d'etre, if you will, of the public financial disclosure program is disclosure for the sake of disclosure. It's like sunshine in government. It's a transparency concept where the idea is that high-level government officials who have responsibility, who have tremendous responsibilities, should be very transparent about the financial interests and other interests that they have, so that the public can independently make a determination about whether or not their interests could in any way cloud their judgment or affect the decision-making that they're conducting. The 450 program, the confidential financial disclosure program, by contrast, is solely to prevent programs and operations of the government from being, in any way affected by people's personal interests and, relationships they have outside of government. So to the extent that this is singularly a prevention of conflicts of interest, as you're going to see when we talk about who files and the roles of supervisors, these are really agency discretionary calls, because the confidential financial disclosure program is about your programs. It's about protecting your programs, and you are the ones who are in the best position to know where those risks lie and who among your staff are most likely to present that kind of risk factor.
And I think this also provides the foundation for our reporting requirements.
Yes.
Unlike with the public financial disclosure reports that have complicated and sometimes arcane requirements for disclosure, the question we have to answer about completeness of reporting with the 450 is, do I have enough information to determine either that the holding in question poses a conflict of interest that we need to mitigate, or will not pose a conflict of interest.
Right.
So if you're asking yourself, do I have enough information on this report? Do I have enough information about this employee? The question you should ask is, do I have enough information to make definitively a determination about the potential for conflict? So who files these things, Cheryl?
Well, this is a really interesting part of the entire 450 system. The definition for who is required to file a 450 is in the financial disclosure implementing regulations at 5 CFR 2634.904. So it is in regulation, and so you should become familiar with that part of the reg. It just is in a shorthand way of saying who files, and we're gonna walk you through that job aid that we had mentioned that's also on our website, to sort of walk you through what the criteria are, or the things that you should be honing in on, and that supervisors should be assisting the ethics shop in making these determinations. But effectively, we're only looking at people who are GS 15 or below. So because folks typically by statute, folks who are above a GS 15 level or SES or above are going to be filing the public financial disclosure report. But with the 450s, with confidential filers, we're really honing in on what are the duties and responsibilities of the employee. And we really want to hone in on those employees who have the ability to affect non-federal entities. But again, these are all going to be determinations that you, the agency, will be making, because you are the ones who are best situated to decide which of your employees have responsibilities, which of your programs would require that you have people be vetted for potential conflict of interest.
Yeah, and I think that's really important. When we look at the regulation, it provides some input and some guidelines, some suggestions about how agencies might make this determination. But really, again, we're talking about a risk management exercise. So it's the agency's determination about the level of responsibility and the likelihood of those responsibilities affecting non-federal entities that really drives this determination. And I think we see that really well when we look at this this guide, the job aid for designating filers. And we have attached this to the Max page, so hopefully you all have that. You can also find it again on oge.gov under the financial disclosure tab. So let's take a look at it.
So, I mean, we've broken this down effectively into the different things that you need to consider when deciding whether or not someone meets sort of the criteria that are outlined or framed out in 2634.904. I mean, first of all, obviously you need to know what their pay level is, because that's going to be determinative largely about whether or not they fall within the public financial disclosure system, or if they would be someone who would be subject to the confidential financial disclosure system. But then we immediately I want us to really look at part 2, because part 2 says, okay, we want to look at what kind of work is the employee engaged in? And Patrick, what are the things that the regulation sort of hones in on, and what folks should be looking at when looking at this part of the criteria, if you will?
Sure. So I think the one that people always think about and is rarely missed is those folks who are involved in contracting, procurement, or other kind of purchasing.
Right.
Right. That seems obvious to us. The possibility for conflict when you're spending government money, buying things from companies, seems clear. But we're also focused on people who administer, award, monitor, make determinations concerning grants, concerning subsidies, licenses, and other federal benefits. So when you have people who are responsible for dispensing or adjusting the amount of benefits of any kind, that's something you want to consider here also. That's another way that you can find potential for conflict. Also, people who regulate, audit, or inspect non-federal entities. And also people who are in maybe regulatory enforcement fields. I used to work at an agency that had financial oversight responsibilities, and our examiners were a major category of confidential financial disclosure filers, because we wanted to make sure those investigations or inspections or those kinds of
regulatory compliance types of roles
work was done impartially, and that our findings would hold up.
And I think that that area too is one that we find, like, even when you're talking about conflicts of interest in the area of regulations and things like that, those likewise aren't the most obvious places, or people don't obviously think of that as potentially presenting a conflict of interest. So I think that, all of the moneyed sorts of things, the dispensing of money and remunerations and benefits like that, I think are the obvious ones. But you have to look at, when you're looking at regulation, when you're looking at auditing, when you're looking at inspecting, you may not be conferring some monetary benefit, but you may very well be, through the exercise of your regulatory function, costing that entity in some way, shape, or form.
Right. So certainly, regulated entities feel affected by regulations and compliance activities. So we want to be especially mindful of those, because sometimes they're less obvious. And then we have this final one that says performing other activities when those will have a direct or substantial effect on financial interests of non-federal entities. So we don't pretend that we know every case that someone has the possibility for conflict. You have the flexibility at the agency level to say, this kind of work creates a possibility for conflict of interest. And the fact that OGE hasn't named it specifically in regulation does not prohibit you from making a determination that someone needs to file. So we really ask, as supervisors, when you're asking yourself, should this person file, really think about whether their duties affect the financial interests of outside entities. And if you're not sure, I know sometimes agency ethics officials will send you this report when you have a new position or when you're reviewing positions. Ask the ethics folks to help you. They'll be happy to help you. We don't want to make the safest determination and just say everyone's going to file, because we aren't certain. We want people to file when they need to file, but we don't want to collect information when we don't have to. So if you're not sure, if it's a borderline call, lead on your ethics office for support, because we don't want to overwhelm the system with meaningless filings. We don't want employees to feel like this is a paperwork exercise. We want to be able to clearly articulate, you should be filing and you must file because of these responsibilities and the potential for conflicts that they pose.
Right. And similarly, when you get to number 3, this again is trying to, I think, reach to things that might not immediately occur to someone, or is trying to alert folks to positions that it can be of a particularly sensitive nature, by dint of the nature of the work itself. So we say, is the employee serving in another position where there's a potential for conflict of interest, appearance of favoritism, or loss of impartiality? So here we're starting to move away from strictly, is there a financial, piece to this equation, and more to, is there a concern about loss of impartiality? Is there a concern that someone might think that there could be an instantiation of favoritism? And so we start to include people who conduct investigations or prosecutions of violations of criminal or civil law. So obviously, anybody who's prosecuting law is in a particularly sensitive position and can do a good amount of good or harm to, an individual, depending upon, the nature of the circumstance. So that's a position that we think we want to make sure that there's no question about the impartiality of the individuals that are performing those functions.
No, exactly. And we also include here, people who are researchers. That may not immediately spring to mind, but researching certain kinds of work, certain kinds of industry activities can have a significant effect on the financial interests of non-federal entities. So we want to take that into account also when we're making these determinations.
And then when we go to number 4, this is kind of trying to get closer to, I think, one of the pieces that we look at when we're trying to decide if someone has a criminal conflict of interest, for example. We're going to talk about the criminal conflict of interest statute, 18 U.S.C. section 208 in just a second. But one of the things that 208 is concerned about is really only reaching to folks who have substantive responsibilities. We don't want to sort of be grabbing individuals who are largely just engaged in ministerial functions or administrative functions, where what they're doing might be important, but it's not reaching to the substantive merits of the activity that's being undertaken.
Right.
So in this question, we're saying what is the substantive nature of the role of the employee? Are they only providing information? Are they only engaged in administration, or engaged somehow on the periphery of the issue? Because if they are, then that's a mitigating factor.
Right. So we don't want to capture people who say file the paperwork after contracts are let. We don't want to capture people who schedule the meetings for the investigatory interviews. Right. We're really getting at people who do the substance of the work. And the people that support them, provided that what they're doing is purely ministerial, probably don't need to complete these reports because they don't have the discretion or the substantive impact on these matters such that it would cause them to have a conflict of interest.
Right. And finally, in the third part, we want to look at the level of the responsibility of the employee. And again, here, this is reaching to whether or not the employee is going to be what we call personally and substantially involved in the types of matters that were sort of referred to earlier: the contracting, the regulating, the auditing, the litigation, et cetera. Now we want to sort of focus more closely on what is exactly the employee doing. So we have a little checklist here, which really reflects, again, the language of the criminal statute, 18 U.S.C. section 208. And we want you to make some discretionary decisions about, like, how involved, how much discretion and how much authority basically does your employee have.
And I think here we start with things that are fairly obvious to folks who don't work on these issues every day. We say, yeah, certainly people who are approving stuff, making decisions, who are the final arbiter, certainly they have the possibility for conflict. But we also suggest that merely making recommendations and rendering advice can also pose a conflict.
Yes.
So it's not necessary that someone be the final decider or the ultimate decision maker or the person who puts their signature on the contract. Someone making recommendations, rendering advice or opinions also is participating and also has the possibility to affect outside non-federal entities. So therefore may need to file a report.
Yes. And with that in mind, I want to caveat number 6, because if we look at number 6, I think my concern with number 6, although we wanted to be complete and this is in the regulation, number 6 is a question about whether or not the employee receives substantial supervisory review. The suggestion being that if there are a lot of layers of review and this individual may only be participating at a very low level and would have all of their work effectively going through various chains of review and approval, that is a consideration as to whether or not this person should be required to file a confidential report. That is certainly one of the considerations we put in here, but my caveat to that is, as Patrick just mentioned a minute ago, under the criminal statute, 18 U.S.C. section 208, you have criminal liability under that statute if you have made a recommendation that was a substantive recommendation to a particular matter. If you had a financial interest in that matter, you still may have criminal liability under 208, even if that recommendation or your contribution had to go up through levels of command and be looked at by somebody else and approved or disapproved.
So I think what we're getting at here is merely because there's some review of your work does not mean you can't have a conflict of interest.
Exactly.
It means that if your work is sufficiently circumscribed by the authority of those who supervise you such that you don't really have any residual discretion.
Mm-hmm.
It may not be appropriate to have you complete a confidential financial disclosure report.
Exactly.
And I think it's also important to note here that these laws that we're talking about, the criminal conflict of interest laws and the regulations, apply equally to all employees.
Yes.
These are not rules that are triggered by the filing of a financial disclosure report. So literally any employee at your agency is subject to these rules. But we make a determination about whether or not the prophylaxis of the financial disclosure report is required based on the likelihood that the rules will be implicated. So that's the determination we're trying to make.
Mm-hmm. And as supervisors, one thing I do want to say here before we move on is that because the filing of a confidential report is triggered by the duties of the position, an employee's duties can change. So simply because, let's say you brought somebody on board and when you brought them on board, they didn't have duties that would necessarily require a 450 filing, as they progress through their job duties or through their career ladder or whatever, once they begin to have duties that fall within the ambit of the confidential filing, at some point in time, somebody should be evaluating periodically whether or not there are more people who should be filing, whether or not some of the people who are filing need to continue to file. So I guess what I'm saying is this isn't a static determination. This is a dynamic determination. And supervisors have a very significant role in alerting the ethics office when their folks are beginning to engage in activities that now might be triggering a confidential financial disclosure requirement.
Absolutely. And we've given agencies not only flexibility to determine who files the report, we have also given agencies flexibility in determining what information they require. So if you're a supervisor involved in confidential financial disclosure review, you may be looking at any number of forms. Many agencies use the OGE created form, which is the OGE Form 450 that we're going to look at today. Some agencies implement an OGE optional Form 450A, which allows for, in certain years, employees to certify that there's been no change in their financial holdings or their responsibilities. So that may be a streamlined effect at your agency. And many agencies also have alternative formats or alternative instructions, which may require significantly different information from their employees because the kinds of holdings and relationships that pose conflicts for those agencies aren't properly or thoroughly captured on the 450, or the 450 captures a lot of information they don't need. So your role as a supervisor, you may be looking at a Form 450, or you may be looking at an alternative form that your agency has devised and then approved with the concurrence of OGE. And again, all of this is aimed at managing the risk of conflict of interest in your agency. And OGE feels strongly that agencies are in the best position to determine how that should be done. So when we certify these things, I think it's important to look at what we mean. What is it? What are we certifying? And we have here on your screen, you can see on the basis of information contained in this report, I conclude that the filer is in compliance with applicable laws and regulations. So if we're going to certify to that, I'm going to have to know what those laws and regulations are.
Well, ostensibly you should, yes.
Someone
you
in this
sign
process
your John Hancock to the page.
Someone in this process is going to have to understand these things. And we are not aiming to, nor do we pretend that you will be an expert in these laws and regulations at the end of today's presentations, nor as a supervisor should you be.
Right.
We are merely asking for your help to assist the ethics officials in identifying areas where the rules might be implicated. So we're going to give you kind of a horseshoes and hand grenades overview of the rules.
Quick and dirty.
So that you can spot issues and flag them for ethics officials who are experts in these laws and regulations, and with your input can make this determination that an employee is in compliance with all the laws and regs. So here's generally how the process breaks down. So why do we start with the conflicts of interest, Cheryl?
Well, we start with the conflict of interest analysis because that is the entire reason why we have confidential financial disclosure filing. Is we want to use this information that the employee gives you about the interest that they and their spouses and others hold, so that you can see whether or not there's anything to which they are assigned or to which they may be assigned where those financial interests or those things that they've disclosed could be affected or be involved. So we do that first because that's the whole reason to have people file these forms.
And also that this is the thing that's going to spur us into action.
Yes.
The goal of this is to prevent conflicts of interest. It's not to detect them. It's not to punish them. It's to find them before they happen and stop them. So where we see the potential for a conflict of interest, we want to identify that as quickly as possible so that we can take steps to make sure it doesn't become an actual conflict of interest. And to that end, our technical review really is subordinate to our conflicts of interest analysis. We mentioned this earlier. The question that we want to ask when we're looking at the report is, do I have the information I need to determine that this is going to be a conflict? This is definitely not going to be a conflict, or we might need to think about taking some sort of remedial action. If you don't have the information you need to make that determination, someone's going to have to get more information.
Right. And we're going to do a little exercise here towards the end of the presentation where we're going to walk you through a mock 450. And we're going to show you places where you probably would not have enough information to do a conflicts analysis. And we're going to give you some hints or some suggestions as to what you might do if you get a 450 that looks like that and that has something like that on it. But I think particularly for supervisors, you really should not be bogged down with the technical review. The best thing you bring to this process is your knowledge of the programs and operations over which you and your staff have cognizance, so that you can be going through and relatively quickly flagging anything on a 450 that you think looks like is somehow related to some of the work that your area of the organization does. You know, if you have enough information so you can flag some technical stuff for the ethics staff, that's great. But we really think that your biggest, the biggest value added that you bring is your piece to the conflicts analysis.
Absolutely. And where you find a potential conflict of interest, the goal is to coordinate with the ethics office to find appropriate remedies. And we don't need to belabor this, but things that we might do in a remedial sense are ask employees to sell potentially conflicting assets, resign from positions that pose possible conflicts of interest, or simply not participate in certain government work that could pose a conflict for them. Generally speaking, that's what we're talking about.
Right.
We have some other options in limited circumstances, but those are the main things that come out of the process. And finally, someone's going to sign this report and certify that the employee is in compliance after we've done all those things. And this whole process by regulation is supposed to take place in 60 days. These records are Privacy Act protected, and agencies retain them for 6 years.
Just one word on the Privacy Act protection, and I mean, they really do need to be maintained confidentially. So if you are in the review chain, when you're in possession of those forms, you really do need to keep them under lock and key. They really can't be left out on your desk. So just a reminder that while they're in your possession, you really do need to treat them with the protection that they deserve.
Absolutely. And here we will just briefly describe the rules that are implicated sometimes in the review of the report, the legal basis for our review. We always start with the criminal conflict of interest statutes, which deal with everything from bribery to post-employment to supplementation of salary, financial conflicts of interest, certain representational activities. You don't need to be an expert in all of these.
Right.
What you really need to be able to help us do is identify potential conflicts of interest. We have regulations that implement some of those laws, as well as the filing standards. And we always have the standards of conduct, which you're probably familiar with from your own ethics training, and any agency ethics requirements. So this is the universe the ethics office is going to be using. And what it's going to require for them to finally certify these reports are the knowledge of the applicable rules, laws, and regulations. We need to know the filer's position and duties, and we have to have knowledge of appropriate remedies. And the area where we require supervisory assistance is really in this middle one. As ethics officials, we don't always know what everyone in the agency is working on.
Imagine that.
And we don't always know what they're going to be working on the next 6 months, 9 months, a year. So this is really where we need your assistance. And this really gets to 18 U.S.C. Section 208, which is our criminal conflict of interest statute, which essentially bars employees from working on government matters that will affect their financial interest. There are some exemptions in our implementing regulation. You can find these at 2640 in 5 CFR. And we're going to cover a couple of the most commonly used ones, but it's enough just to be aware that there are some exemptions, and these dovetail neatly with some of our reporting requirements. So it's all kind of complicated, and we break it down then into this very simple Venn diagram. When we're looking for potential 208 problems, potential criminal conflicts of interest. We're looking for a nexus between government work and the holdings that an employee may have. So we're looking at a government decision, a government contract, an investigation, litigation, a grant, really any government action that would affect the holdings or other interests of the employee. And this is where we need your help. So where you see something on a report and you say, you know what, that could be affected by something this employee might work on. We just need you to let us know.
Right. So, I mean, for example, if you work for a regulatory organization and you know that there is a regulatory rulemaking that's been being contemplated for the next, fiscal year or for the next quarter, and you have an employee who is going to be very much involved in working on the substance of that regulation, we would expect you to look at the form to see whether or not there was, any regulated entity. Or any, does their spouse work for a regulated entity? Do they have a financial interest in one of the regulated entities? Do they have an outside position, like a temporary employment or something with a regulated entity? And you be making the call about whether or not you think that there's anything that they've reported that is an institution or something that might be affected by the work that they're going to be performing.
No, absolutely. And I think, something we just want to touch on here. And if we were doing this class with ethics officials, we'd spend 45 minutes talking about the kinds of government matters.
Yes.
As a supervisor, you don't need to know about the taxonomies of government matters and how the different laws apply to them. But what we really need you to know is that conflicts of interest can arise from matters that have parties like litigation or contracts, but they can also arise from broader matters like certain kinds of regulations. So when you're determining who should file and you're determining whether or not their work might run into a possible conflict, you have to think about the work that they do that affects individuals, matters that have named parties, as well as broader matters like policies and regulations.
Yeah, so for example, let's say you work for a grant-making organization. Certainly, you want to make sure that your employees don't have any conflict of interest with any individual grants applications that they might be reviewing, for example. So you would want to make sure they didn't have financial interest in the grantees and wouldn't be assigned a grant from a grant application from someone that they had, like where their spouse was employed, et cetera, something like that. But in addition, you have to look at sort of like the grant program itself as well, because the grant program itself is a matter. And so at the level of deciding what the grant program is going to look like before you've even gone out and people have even started coming in with requests for grant applications, at the level of developing the program, you also need to make sure that your employees who are working on developing the program criteria don't have conflicts with the way that you're laying out that grant program.
Right.
So that's what we're trying to get at is we're not just looking at those discrete things where you're making final determinations where there are discrete parties like in a contract or in a grant or a license. When you're developing those programs and coming up with those protocols, at that level, you also need to be mindful that your employees don't have conflicts of interest.
Absolutely. And we do include on the slide here that there are certain matters that are too broad to be covered under the law. That's a determination that you probably want to make in consultation with an ethics official. So if you have someone and you say they're going to work on something, it looks like there's a potential for conflict, but I'm not sure, that might be too broad to pose a conflict, flag it for us anyway. We can work with you to determine if there are parts of it that are too broad, if the whole thing is too broad to pose a conflict. That's a difficult determination, and it's probably not a determination you want to make on your own.
Yes, exactly.
And we're not just interested in the filer's own financial interests. The criminal conflict of interest statute treats as the filer's own the interests of certain other persons. And you see this reflected in the instructions on the form, and they include the spouse. So if your spouse has holdings, it's kind of like you have holdings. We don't make distinctions there. Likewise for the minor child, if they have a general partner through a general partnership. Also any organization where the employee is serving as an officer, director, trustee, general partner, or employee. So where you have someone reporting an outside employment arrangement, all of the interests of that outside employer are treated as the employee's own.
Right.
So we want to keep that in mind when we do our reviews, and also anyone that they are negotiating or have an arrangement for employment. So this is the the provision that people need to be mindful of when they're thinking about leaving government or they're seeking employment outside of the government.
Mm-hmm.
So here's sort of how our process works. And when you're looking at the report, what we would like your help with is these first two steps. And particularly the first one is, what is the employee going to be working on? Could that affect any of the disclosed assets?
Mm-hmm.
And if it can, there may be an exemption that applies. So we want you to flag it if the duties and the interests intersect,
Mm-hmm.
and the ethics office will be able to work with the employee to determine if an exemption may allow them to participate, notwithstanding the potential conflict.
Mm-hmm.
Just for sort of your situational awareness, some of those exemptions that are most often used include an exemption for diversified mutual funds. When you look at the reporting instructions on the 450, it says you don't have to report diversified mutual funds. This is why,
Mm-hmm.
because they're exempt from coverage under the criminal conflict of interest statute. It's an exemption issued by OGE. Basically what it said is if the fund is diversified, that's such a broad interest all over the place that it can't really pose a conflict. We have a de minimis for sector mutual funds. So these are funds that have a stated policy focusing on one area of the economy, one state in the US or one country outside of the United States. We have a de minimis. We say a mutual fund is a diluted interest. So even if it specializes, if it's below a certain value, that might not be a problem. You'll notice also on the 450, there are no value categories. So if you're looking at a mutual fund and you say that potentially poses a conflict for us, flag it for us. We'll work with the employee to figure out if this exemption is available to them. We also have a de minimis for security. So these are your stock holdings. So if someone reports a conflicting asset, flag it for us, but it may be possible the employee can have relief under this exemption as well. So we're not just concerned with criminal matters here, right, Cheryl?
No. There's a whole nother universe of authorities that we're also concerned about as well, which are contained within the standards of ethical conduct.
And we're not going to go through all of these today.
No.
The standards of conduct are something you're probably familiar with by virtue of your annual ethics training that you probably receive, or the initial ethics orientation of your agency. But we do want to touch on briefly the impartiality regulations, because this is something that does come up in the course of reviews.
And this is an area too where we're going to similarly need your assistance, because we're going to need to know some information about what the employee is likely to be working on, and who those parties might be. So again, this is a reason why we would like you to be aware of what the impartiality provisions are, so that you know the kinds of information that should be causing you to flag things for the ethics shop.
Right. So basically what we're looking for here is there a nexus between any relationships that someone has reported and the work that they're doing?
Right.
So it may not be strictly a financial arrangement. Some of the common ones we see on 450s are a former employer.
Right.
The regulation says you have a covered relationship with a former employer for 1 year after you leave. So if you're looking at a new entrant report, see a former employer, someone used to work, that's a potential appearance issue for at least a year. We may have people that we associate with as part of an outside activity that may not be a paid outside activity. That could create a covered relationship. Clients of the spouse, people a spouse or child work with, could also pose a potential appearance issue. So basically, we're just expanding this concept. And even though there might not be strictly a financial relationship reported on the form, if there's a nexus, we still want to think about it. So if you have a nexus between the work that the person's doing and any of the relationships, financial or not, on the form, please flag them for us. Likewise, we have regulations that apply to outside activities, and many agencies also have supplemental regulations in this area. So basically what we're going to be concerned about here is there an intersection between the employee's work for the government and any of the outside activities they report on the form? And if you have prior approval requirements, we want to make sure that your employees have complied with those. It's also always a good idea to get advice around outside activities. So if you see something for the first time and you say, we don't have prior approval requirements, you may suggest to your employee or suggest to the ethics official that if they've not received counseling, they should. The class we teach on outside activity approval, we look at like 20 different laws and regulations, because there are a lot of issues that can come up.
Yeah, I'm the alternate DEO here at OGE, and as a matter of practice, particularly with new employees who come on board, is I actively encourage folks to come to me. We don't have a prior approval requirement, but I actively encourage folks to come to me. It's just if for no other reason than I give everybody a memo where I basically walk through each of the standards and statutes that I think they might bump up against, and give them some examples of how they might bump up against those things. Not as a way of precluding them from engaging in the activity, but just making sure that if they're engaging in the activity, they're doing it without inadvertently violating one of the standards of conduct, or God forbid, one of the criminal statutes.
Yep. So this is our general process there. Have they gotten prior approval if it's required?
Mm-hmm.
Should they have gotten some sort of prior guidance? If they haven't, we
Mm-hmm.
want to make sure that they get the guidance they need. They certainly must if you have a requirement. They should, even if you don't.
Mm-hmm.
And then if there is a relationship between their duties and responsibilities and that outside employer or outside activity,
Mm-hmm.
we need your help in identifying that, because we may have some additional considerations.
Mm-hmm.
All right, so that's a lot of prologue.
Yes.
But now we're going to get into the exercise. So we're going to spend the next 15 or 20 minutes just kind of going through very quickly. This doesn't have to take a lot of time. We're going to go through what an intermediate review of a report would look like,
mm-hmm.
and sort of show you where you might have a question and give you some options for strategies you can use to either expedite the process or to seek help where you require it.
Mm-hmm.
So for today's exercise, we're going to pretend that we all work for the Nuclear Energy Regulatory Commission, which I'm pretty sure doesn't exist.
Yeah, it's a non-existent, yes.
Which is good, because
Yes.
we all know exactly the same amount about it, which is nothing. Our mission is to regulate nuclear energy producers. We don't have any special statutory or regulatory ethics provisions. So
Mhm.
we're just dealing with the rules we've talked about. Our employee is James, or Jim Nikolic. He is a GS15 program manager. He's been with us. He manages a team of inspectors and experts who make recommendations specifically related to the regulation of nuclear energy producers and more broadly affect the energy sector.
Mm-hmm.
So we have some information here. His work affects the energy sector. That seems to be what he's doing for us.
Mm-hmm.
So this is usually the information that we need you to bring to the review, and his qualifications. He's a physicist. We just note here that you want to make sure when you get this report that the dates are there and that the filing date is included. If you're the first person to touch this report, so you're starting to get reports already, please help us by indicating the date you received the report. We don't want it to appear that your employees have filed this report late because the agency forgot to stamp them. So if you're the first person to touch the report, make sure the date received by the agency is included when you get it. Whoever the employee is to turn this report into, that's the date the agency receives it.
And always make sure that the employee has signed and dated the form too, because if not, it just needs to go right back, because we need their signature and their date and the date on the form, because that's them certifying that what they've disclosed is true and truthful.
And if you want to be really kind to your ethics officers, if you are the first person to touch this report, it is a nice thing to do to look at this section in the middle with the yes/no boxes, and where people say they have reportable entries, that actually there are entries reported on the form, because that's the sort of thing that 100% of the time, if it's not correct, it's going to have to go back.
Yeah, and you'll wind up seeing it again.
You get to see it again.
You can save yourself some time by flagging it immediately.
Yep. So those are sort of administrative things, but if you don't want to have to see these reports twice, they can be very, very, very efficient to deal with when you receive them. So in the first section here, we're looking at assets and income. So what kind of things do we expect to see here?
Well, typically, I think that if it's a new entrant, particularly, you would want to see a prior employer, unless their prior employer was another federal agency. So we'd be looking for any kind of prior employment. We'd be looking for any spousal employment or other spousal holdings, any sort of investment interests that they have, any retirement or pension interests that they have other than federal retirement or pensions. So, any universe of employment, spousal employment, retirement, or other sort of financial investments like securities and bonds and stocks and things like that.
Yeah, so we'll see sources of income basically,
Yeah.
and things we hold for investment purposes.
Yep.
So let's go through these. Let's take this first one. It looks like he's coming in from a big private energy company, and he says he doesn't hold that anymore. With a new entrant, I'd be inclined to suspect that this is a prior employer.
Yes.
People often start there. Might be a bit of a trick here, because if I'm thinking back to his duties, his work affects the energy sector.
Yes.
So we may have a nexus here.
Yes.
And this is where we would really appreciate the help of supervisors in telling us whether this is really a nexus, really potentially a problem for James, or not. So if you know he's going to be working on matters that affect BPEC in the next year, or in the foreseeable future, let us know, because we're going to want to take a look at this. This might be an appearance concern.
In keeping with that too, well, if you're flagging something, we'd also want to know from you the magnitude of the conflict of interest, and sort of like not only the likelihood that it would raise a conflict, but how bad of a conflict would it be, and what is your position on whether or not this employee can afford to be, in your mind, disqualified from matters that could affect this company, or to what extent this is a grave conflict and they must be kept out of things. So, your weigh in as to the level of the conflict, the severity of the conflict. So it's not only just flagging it, but also being thoughtful about, if we're going to have to remedy this, what should that remedy look like?
No, exactly. And looking at this second entry, we see that he has a residual retirement plan with BPEC. And this is a common thing that you'll probably see. And it's likely an instance of underreporting.
Yes.
Because retirement accounts like 401ks, these defined contribution accounts, likewise our 403bs or IRAs, are tax advantaged accounts for holding financial assets. We got to know what's underneath this.
Yeah, it's basically an account and it's got something in it. So at this point, we don't have any idea what's in it. And without knowing what's in it, we can't know whether and to what extent it's a conflict.
Right. So here you have some options. If you're the first person to touch this report and you see it, you can hand it back to your employee, or give it back to James and say, if you have reportable assets within the 401k, they need to go on the form so we can analyze them for potential conflicts. Or you can look forward to seeing this report again after the ethics official does that. And it's really up to you. And it's up to the process that your agency uses. But ultimately, we're going to need to look at the underlying holdings of the 401k to determine whether or not they pose a conflict.
And I think particularly in situations where the former employer themselves presents a likelihood of a conflict, even with a 401k, I think that we definitely would be, I think, have reason to be concerned about what possibly is contained in that 401k, because very often, companies will offer sort of like securities or other things for the company as part of what they allow their people to invest in their 401ks, or some sort of fund that was a boutique fund that the company created, for itself. So I think when the former employer themselves is potentially a conflict, an account like this, I think, would have to be flagged as a potential for conflict, unless or until you know that there's absolutely nothing in it to worry about.
Right. So, yeah. So I think if BPEC is a likely conflict for Mr. Nikolic, we would be very concerned if he held BPEC stock within his 401k.
Right. Exactly.
That would be the most common situation that would cause us concern. With the information here, we don't know, so we can't make a determination. So where you, as a supervisor reviewing this, can't tell, you don't have enough information, you can either, in this case where it's fairly straightforward, ask the employee to update the report, or make a note that I don't have enough information, I can't tell from the information provided here. So it also looks like Mr. Nikolic is involved in some outside teaching or speaking or something like that. He's receiving honoraria from the Society of Nuclear Research and Council on Atomic Energy. And this may be a case where we need to encourage him to get counseling around outside activities. But from you as a supervisory reviewer, what we would also like to know is whether his duties are likely to affect either of these entities.
Right.
Because we could have a potential for conflict or an appearance issue there. So that would be something you could note on this form, is either this we've never done business. We don't deal with the society or the council, or these are people who come before us all the time, and I have a concern. Knowing either way is very helpful to the ethics office in making a determination.
Yeah, and I think, like, for example, with the Society for Nuclear Research, I mean, I think that I think oftentimes we have folks on our staffs who are engaged in professional activities outside the scope of their official duties, or even in conjunction with the performance of their official duties. So again, as a supervisor, if you know that, for example, an affiliation with a particular professional association is something that you're going to want with this employee, you're going to want to encourage this employee to continue to do, or you have other people in your staff who are doing it, again, that's going to be information that's helpful to the ethics shop to know, and for you to sort of flag that as well for, okay, what am I going to allow them to do in an official capacity? What is going to be, relegated entirely to their outside their professional capacity in their personal capacity? So that, again, it's an opportunity for you, in conjunction with the ethics shop, to be sort of drawing some parameters for this employee about what their participation will be, in what capacity their participation will be permitted, and to sort of, give the employee fair notice as to what's okay and what isn't.
Right. And to this last entry on this form, Seagate Technologies, it looks like this is his spouse's employer.
Mm-hmm.
Again, here we want to give you some options. You might know what Seagate does. You might know that they do or do not do business with your agency or your office, and they may or may not pose a conflict of interest for your employee. If you can make that determination from the information provided here, let the ethics office know, either, yay or nay, it's never going to be a problem, or it is likely to be a problem.
Mm-hmm.
If you don't know what Seagate is, you have some choices. You can look it up, or you can just let us know, I don't know what this is.
Mm-hmm.
We'll figure it out. If we think there's maybe a nexus during our review, we may come back to you and say, this is what they do. Do you think that's maybe a problem? Can you see James getting involved in this sort of matter?
Mm-hmm.
Seagate makes computer equipment. So I don't know if he's involved in computer equipment purchasing, but if you anticipated he was, it might be a problem. So, you're welcome to do your own research, or if you're just, if time doesn't permit, or you don't want to take that approach, just let us know that you can't determine either way, so that we can get that information and work with you.
This is sort of an aside, but sort of keeping with the use of the 450 for vetting people. There are agencies that use a 450 that do require people who are being considered for hire, somebody before they even come on board, using the 450 to vet for potential conflicts of interest, to ensure that you don't have any insuperable conflicts before the person takes the position. And I think one area where this can be particularly thorny if you don't do that is in the area of spousal employment, because once an employee's on board, and it's only after they're on board that, through the 450, you, the supervisor, take a look at their form and you realize that their spouse is working for an organization that is, deeply affected by the work this employee is expected to perform. You now have a conflict crisis that is going to be much more difficult to ameliorate, because you're dealing with a non-federal employee, e.g. the spouse of the employee that you just hired. So again, just sort of a shout out to supervisors, is that this is also a tool that you could be using as part of your hiring process, to make sure that these aren't problems that become huge problems once the person's on board, if you use this as a vehicle for vetting people in advance.
No, absolutely, because you don't want to have someone come on board who you have to keep on ice for months,
right?
Because they're unwinding a lot of conflicts of interest,
Mm-hmm.
especially if they didn't know or intend to unwind those conflicts of interest.
Right.
Or even worse, which I've seen, is that it's not possible to unwind those
Exactly.
things, and they may not be able to perform the functions they were hired to perform.
Mm-hmm.
That's a really bad situation. In my experience, agencies make this mistake exactly once and then put in place processes to prevent it.
Right.
Because it's really pretty horrible.
Mm-hmm.
We have a few more assets that are reported. Number one here is Transocean Limited. You may know what they do, you may not. Again, if you are familiar with the entity and you can give us a determination that it will or won't pose a conflict, that is very much appreciated. If you don't, you can of course look it up. If you prefer not to, we just need an indication that you weren't able to make a determination because you had insufficient information.
Mm-hmm.
It's managed account. I've come to dislike these.
Yeah, they're more trouble than they're worth, really.
Well, at least from our perspective.
Yeah, from our perspective. Yeah.
They lead to not so great news sometimes.
Yeah. If you see a managed account on a report, like, and if it's reported as a managed account, I think the best thing you can do is to flag it for the ethics shop, because it's like other accounts where we need to know what it's invested in. Managed accounts are a little bit thornier because although the individual, and correct me if I'm wrong, Patrick, that the individual actually does own and hold the stocks that are in, and the securities that are in the account, they don't have complete discretion to control what the account is invested in.
Yeah, these are tricky. So there is an account manager who buys and sells individual securities that are the property of the filer, the person who holds the account. So in that way, it's just like any other brokerage account. Sometimes the managers have policies that limit the customization that they're willing to do for an account holder. And that's where we sometimes run into some struggles, where they're managing a number of accounts in a similar way, and they may or may not be willing to make sure that, in our case, Mr. Nikolic stays out of energy sector holdings. And it's just an issue you have to work through, but this is a place where, you know, you can flag it and probably count on some follow-on conversations. Next, we have an exchange-traded fund here, the iShares S&P Global Telecom. This is an example of maybe a sector fund. And if telecom is a potential conflict for Mr. Nikolic, let us know, flag that. If it's not, let us know it's not going to be a problem there either. But, you know, this should be enough information to make that determination. However, employees aren't always so good. Sometimes employees say iShares ETF. There are hundreds of iShares ETFs. There's probably, there's an energy
sector. It's like
sector
saying mutual fund.
Like saying mutual fund, yeah. So in that case, you could tell us either this isn't enough information to determine this would or wouldn't pose a conflict, or you could ask your employee to clarify the full name of the fund. But someone's going to have to figure that out before we can certify this report. We included this Smith Hardware LLP, a private company. Certainly you could tell us if this poses a potential conflict, but oftentimes some of these holdings also evidence a possible outside activity.
Yes.
So this may be a time to say, you know, did I see an outside activity report for the hardware? Should I have? You could mention it to your employee or just flag it for us that you think it's worth looking into. And then finally, we have the 529 plan. Usually these are innocuous holding diversified funds. We include it here because you probably see a lot of these. These are the tax advantaged vehicles for investing for college education or prepaying for college education. And as a general matter, we find that the assets tend to be diversified in nature. But so when you see this, we just, you know, want to raise that for your awareness.
Yeah, I mean, effectively, we just wanted to give you sort of like, these are very common things that people see on 450s when people submit. These are the, you know, kind of a range of things that you might likely see, just so that you can sort of make sense of it when you're looking at it. Like, you know, when you first get a 450, your initial, at least when I did, the initial instinct is, I don't even know what I'm looking at, you know? So we're trying to give you a sensibility about how to sort of like parse through the things that you might see and have at least some basic understanding of, oh, these are the kind of things that I really want to hone in on, whereas these are the things that probably aren't going to be as much of an issue and I don't need to spend as much time on.
And here we've just provided you kind of a summary of the kinds of things here you can expect to see. And this can be helpful as you're reviewing the report to sort of refer to. Part 2, we deal with liabilities. Most common liabilities are not reportable. So it's rare that you'll see something there, and it's even rarer still that those pose potential problems. But if you do see a nexus between a creditor and the work that your employee does, that's a good thing to flag for us. But generally, there's not much reported here. Part 3, outside positions. We've talked about these kind of already, but you know, this is an area where we will need your help to determine if our work at the agency intersects with these organizations, and especially if Mr. Nikolic's work intersects with these organizations. And you may be involved in the prior approval for outside activity process. And if that hasn't happened, you want to make sure that it does happen. So in this case, we sort of see the 3 that we've already discussed. So in part 3, we often see the prior employer, outside employment, including consulting, and certain outside activities. Something we might ask about here is if Smith hardware should be included. For completeness, we have agreements and arrangements. So this is where you would see any agreements for future employment or continuing agreements with a prior employer. And again, we talked about the 401k before. So in part 1, we're going to need the underlying holdings, but here's where we get more information about the plan itself. You might also see defined benefit pension plans here. So if someone has a pension with a former employer, that may be included here. If that former employer poses a potential conflict, that would be a good thing to flag for the ethics office also.
Yeah, leave of absence. We see leaves of absence here. So if you have somebody who's coming in from a university or something, you would expect to see a leave of absence. Here, arrangements for prospective employment as well. So if somebody is seeking either just outside employment or they're seeking employment that would terminate their government employment, we'd want to see that here as well.
Excellent. Yeah. So those are the most common entries. So that's pretty much it. That's only taken us, maybe 10 or 15 minutes to go through a 450. As you become more comfortable with these, the process goes a little quicker. Also, you'll find, some employees don't have a lot of reporting. There's just not a lot to report. If you're like me, you have a few mutual funds that aren't reportable because they're diversified, no outside employment, that can be a pretty quick process. But again, what we're really looking for in the way of your assistance as a supervisor is helping us to see the areas where those holdings might intersect with the work of the employee. And where you see that, we really want to make that clear to the ethics official or the other reviewing official so that we can take remedial steps.
One other thing I did want to kind of pipe up on with respect to outside positions is I do think as a supervisor, you do want to pay particular attention to any outside positions that your employee might be listing, if for no other reason than, if your agency has, for example, de minimis personal use policies, and let's say the person has an outside, not a job, they're not being paid for it, but they're doing some work for an outside organization where they're engaged in teaching, speaking, or writing, or something of that ilk. I think that wanting to alert them to, any limitations on their being able to use their time on the job or to use government, property. I think it's, I just think that this is your opportunity to be a counselor to your employees as well, because I know that I very frequently will consult with supervisors about their preferences for or to find out, what they will allow employees to do by way of after hours use of their office, for example, to write a paper or whatever. So I guess I'm just saying that it's more than just an exercise in conflict of interest. It's also giving you a portrait of your employee for you to kind of keep in mind, again, because duties aren't static and situations aren't static, and it gives you an opportunity to sort of be aware of, for future reference, be aware of the situation that your employees are in.
No, absolutely. And, I think going back to our first point, which is this is an exercise in risk mitigation for the agency. So the greater awareness you have, your consistency with reminding people that these are potential issues that could derail work or cause problems. This is one tool that we have, but as a supervisor, you have other tools available. You can reach out to ethics counselors. If you need briefings or clarifications on policies, you can remind employees periodically of their obligations and of the policies of your office. And you can just really be thoughtful and careful about these things. And the 450 gives a good occasion to think about them and also information to undertake those activities more thoughtfully. So that's all we have. We do have just a minute or two left. Holly, could we open up the phones for any questions folks might have?
Yes, thank you. To ask a question, please unmute your phone, press star followed by the number 1, and when prompted, record your name clearly so I may introduce your question. To withdraw your question, press star 2. Again, to ask a question, star 1. One moment, it'll take a few moments for questions to come in.
While we're waiting for a question, we would like to remind everyone that this and all presentations are immediately archived on OGE's Institute for Ethics and Government YouTube channel, which you can find at youtube.com/OGE Institute. So if you have supervisors who are going to begin this work and they would like a refresher on how they can do that, you can share the link with them and they can watch it at their leisure. So don't feel like just because someone might have missed it today, it's forever gone.
Well, the other thing I wanted to let people know is that on our YouTube channel, we do have a massive open online course that we have there on 450 review. So for those of you out there who may want to know more about the actual review process and certification, that massive open online course is there, and it's a much more thorough going through of the form and talks a little bit more detail about the technical reporting requirements and gets a little bit more other than just 208, the conflict of interest and impartiality provisions, and talks about doing an ethics scrub on other information that's provided on the form.
No, that's exactly right. That's very helpful, and it gives you an opportunity to practice.
Yes.
You could do an exercise and then go sort of debrief it yourself and see how you did.
Yes.
Do you have any questions on the phone, Holly?
I don't show any questions at this time, but as a last reminder, if you would like to ask a question, press star followed by the number 1.
All right.
Okay.
Well, we look forward to joining you again soon. We'd like to do another exercise adding to that 450 MOOC. So we'll be preparing that and announcing that shortly. And again, if you have thoughts or ideas about things that we should be covering in these broadcasts, we want to be as responsive as we can to you, resources allowing. You're probably aware that it's a busy time in the ethics world right now. But if you have burning needs for ethics education, please do let us know, because we do try and respond to those needs as much as possible.
We do have one question over the phone. Would you like to take that?
Yes, please.
All right. Nancy, you may ask your question.
Hi, good afternoon. Thank you, Mo, for this education. I have a question about the difference between the confidential financial disclosure report and I think you call it the non-confidential disclosure report, and who fills out which one and
Sure.
how often.
Sure. So we have basically two systems in the government when it comes to financial disclosure reports. Today, we're discussing the confidential report. This is a report that is created by OGE in regulation, and the requirements of the reporting were determined by OGE to facilitate a conflicts of interest review. So basically, when we are establishing these reporting requirements, we're just asking, is this the right information to help us prevent conflicts of interest? And this is filed by employees at the GS-15 level and below, so kind of your rank and file employees who have duties and responsibilities that affect outside entities. The public report is filed based on seniority. So those people, basically your SESers and above, the people above the GS-15 level, complete the public report. And this report was established by the Ethics in Government Act of 1978. And rather than OGE determining the contents of the report, the Congress details actually in the law those requirements, and we implemented it through our financial disclosure regulations. And those reports are available to the public, either by request of the agency or through OGE if it's a more senior person who has to come to our agency. And that information is publicly available and is releasable under the Ethics in Government Act.
Nancy, yeah. Also, if you want to look for the definition, you should look in 5 CFR 2634. And it discusses the two different systems, the public financial disclosure system and the confidential financial disclosure system. So that's by regulation where the two different systems are discussed and laid out. But also on our website, under the financial disclosure tab on OGE's website, you will also find a broader discussion and an explanation of the distinction between the public financial disclosure system and the confidential financial disclosure system.
As well as more information than you probably would ever want about the reporting requirements for both systems. But yeah, thank you very much for your question.
Follow-up question on that.
Sure.
So the public reports, then, are they actually published on a website somewhere, or do you have to request them via FOIA?
It depends. So they're releasable under the Ethics in Government Act rather than the Freedom of Information Act. So the Ethics in Government Act provides the authority for release. For certain very high-level positions, those are available on OGE's website. The rest of the reports are requested via the OGE Form 201, either from OGE for those folks requiring Senate confirmation, or from the agency for the less senior employees.
Yeah, so anyone who's a presidential appointee who's been Senate confirmed, as well as the designated agency ethics officials of across government, their reports are sent to OGE for certification, and we put them on our website
For certain
for certain groups of them. For anyone who is non-PAS but is a public filer, so your SESs and other folks in your agency, those people would file public financial disclosure reports. And if someone wanted a copy from your agency, they would have to file an OGE Form 201 to your agency, and your agency would have to release that report to that individual.
Right.
All right, thank you both.
Sure.
Mhm,
Thank
sure.
you, Nancy. I think we're just about out of time, Cheryl. So thank you all for joining us. And again, we do hope if you have ethics education needs that you either make us aware of those through the course evaluations or through your desk officers, because we do want to be as responsive as possible. We thank you again for joining us, and we look forward to seeing you next time.
Good afternoon, everyone.